firstly, let's talk about forex trading, right?
Okay.
So you've not done it before. You've never traded. You've never had a demo account.
No, not at
Nothing of
all.
that sort. Okay.
No, nothing of that sort.
All right, and you say it's interesting, right?
Yeah, it is very interesting. I mean, I do try to pay attention to the markets and what's happening, but obviously without prior knowledge, it is a bit complicated.
Okay. Why do you feel it's interesting? What in it captures your mind and your all your being to want to be involved in trading?
I suppose also, it comes down to like how, what a country, what they do, how it affects the market and how it basically affects our way of life as well,
Yeah.
Because if one thing on the market, let's say, for example, the US with that whole thing with China and Huawei and stuff like that, how that's affecting everyone else as well,
Right.
It's those sort of things. It makes it very interesting to, to know what's happening more in depth as opposed to just having a general knowledge outlook on it.
All right, fine. So basically, let's just get straight into it. Foreign exchange is basically the buying and selling of foreign currency, which is you're exchanging foreign currency. It's called foreign exchange. You're basically buying and selling foreign currency. So for example, you may ask yourself this question: if I want to buy something at $1 and sell it at $1, there's no benefit doing that because there's no profit in that, right?
Right.
So you've got to buy something at a low price and sell it at a high price. That is now your profit.
Okay.
So let's just say, for example, have you traveled out of South Africa before?
Yeah, I've actually lived in France for 4 years.
All right. So when you went there, you needed to change currencies from South African rands to euros or whichever currencies you wanted to, right?
Exactly. Yeah.
Okay. Let's say, for example, you wanna go and stay in Paris, for example, and you take your rands and you go to the bank and you say, listen, I want to change this over into euros. So the bank will give you a rate of whatever, let's just say 18, 19 or whatever the rate is at the moment. They'll give you a rate for your funds. And then you go into France and then you spend maybe a few weeks there and then you realize that, you know what, you want to come back to South Africa, but while you were in France, you did not actually use that euros that you had changed over at the bank, okay?
Right.
Because you stayed with family and friends. And when you returned back to South Africa, you took the same euros and you went back to the same bank to have it changed back to South African rands.
Yeah.
And what the bank has done, they've given you your rands back, but depending on the fluctuation of the currency, they either gave you more rands back or they gave you less rands back.
Yeah.
All right. Two reasons. Number one, the bank buying rate and selling rate is always different. They make about 20 cents or 40 cents between the buying and selling of currencies. The other reason could be that the currency had fluctuated very much so, where you either made a profit or you either made a loss.
Right.
So that basically is exchanging currency or foreign exchange.
Yeah.
Okay. Then the other thing is that we see currencies on a chart. Okay. Let's just see if we can find a chart. We see currency on. Let's open a. Let's see a fresh chart. Okay. Let's look at this. Can you see this GBP NZD?
Yeah, I can see that.
All right. Let's just clear up all of this.
Let me ask you a question quickly.
Sure.
Like, I was watching one or two of the videos that Prince had sent me, and I was just looking through it. And like these graphs, they look very complicated and stuff. Is it very difficult to trade?
No, you see what I just did while I was talking to you? I went and...
Yeah.
All right, can you see what I've done? If you look at this, it's a whole lot of noise, too busy.
Yeah.
So what I've done to make it easier for you to start is I went and I hid the noise, or I hid all of those lines and stuff, because once you understand what they're for, you'll actually look beyond them and you'll understand what's really going on.
Okay.
And then time to come, you may not even need them, because you look at a chart and you'll just know what is happening on the chart in terms of an uprise or a downside drop or something. Okay.
Okay.
Right. So this is just a plain and simple chart. It's totally naked as such. We don't have any indicators or lines on it. I just want to get into one specific item, which is called a candle.
Okay.
Okay. All right. So let's take, can you see this candle here, this reddish candle, this pinkish,
Yeah.
whatever color it is?
Yeah.
Right. So this is a candle, and every candle is specifying a specific period of time.
Okay.
Okay. So at the moment we're looking at this currency, which is Great Britain pounds to the New Zealand dollar.
Okay.
Okay.
Right.
So we are saying that the value of the Great Britain pound to the New Zealand dollar, if you look at where my pointer is, my mouse, okay?
Yeah. Okay.
My mouse is currently here, and at the right-hand side, you'll see on this graph, it's 1.98407. Can you see that?
Yeah, I can.
Okay, so that's the price at the moment for Great Britain pound to New Zealand dollar, okay?
Okay.
Well, not at the moment. That's the price where my pointer is.
Okay.
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 So a time frame is, as I said, a period of time, whether it can be 5 minutes, or 1 minute, 15 minutes, or 30 minutes. The time frames we have are further up here. So when we get into trading view for you to learn, we will teach you how to manage these things. But for now, I'm just explaining to you the intro in terms of Forex. I'm not doing a tutor to teach you how to handle charts and all of that, okay, for now, okay?
Okay. All right.
All right, so on the top left-hand side, we see this is the currency pair that we're talking about, Great Britain pound to New Zealand dollar. There are various time frames, 1 minute, 5, 15, 1 hour, 4 hour, the daily, then we have weekly, monthly, and so on. For now, we are on the 4 hour time frame, okay? And you can see it watermarked at the back here.
Yeah. Yeah.
Okay, so looking at this candle, this candle typifies the time frame of 4 hours. So in other words, for this candle to be formed, it took 4 hours to happen, okay?
So that big one there, basically.
Yes, this entire candle took
right.
4 hours to form, okay?
Okay.
Right. So if I were to change this and go into top left-hand side 1 hour time frame,
okay.
Now you see the candle, this candle has taken 1 hour to form.
Okay, all right.
Okay, so if we go into a 5 minute time frame, so this has taken 5 minutes to form.
Okay.
Right, so let's just go back to where we were, which was a 4 hour time frame. And we are saying, okay,
so one question.
Right.
So the candle there, that reddish one, is that the Great Britain pound or the New Zealand dollar?
All right, that is neither. It is the pair.
Okay.
Great Britain pound and New Zealand dollar, okay?
Okay.
So you get Euro USD, you get various other currencies. So at that time, we are saying the price to convert the currency pair GBP NZD at this point where my pointer is 1.97992. The figure is on the right hand side.
Yeah, I can see that.
So the candle this candle typifies 4 hours worth of trading between the GBP and the NZD. So the candle has a body and has a wick. Can you see right on top here? There's a wick.
Yeah, I can see
we call it a candle. We actually call it a Japanese candle, but on the top of it there's a little wick. You see, yes, there's a wick. There's a wick here as well. Can you see that?
Okay. Yes, I can.
Then it also has a wick at the bottom as well. Okay, you with me?
Yes.
Right. So let's just say, for argument's sake, this price for this currency we're talking about started here.
Okay.
And if you look at on the right hand side, we have a price there, which is 1.9. For now, let's not worry about the value of something, okay? Let's just know the price at this 4 hour candle started here, okay?
Okay.
Then what had happened is that the price increased. It increased to the top of this wick. Can you see the wick there?
Yes, I can see that.
Right. So the price increased to the top of the wick, and then the price started decreasing right to the bottom of the wick. Okay.
Okay.
So what I'm saying is this entire 4-hour candle, that was the highest it's been for that 4-hour, and that is the lowest it's been for the 4-hour.
Oh, okay, I get that. So then, but then now, how do you determine where it started and where it ended?
Okay, we get there. So for example, if you go to a
Okay.
store to buy any item, they
Right.
will tell you that the price today is, say, 10 bucks.
Okay.
Okay, so when you went to the store to buy the item, it was 10 bucks. And you
Okay.
went maybe a day later and the same thing is now cheaper, maybe 8 bucks.
Okay.
So price fluctuates depending on the time, okay?
Okay. All right. No
So
problem.
what we are saying is that when this candle opened, it opened at this point here, okay?
Okay.
Then it went up to that highest point for this candle, okay?
Okay.
And then it continued right down. This is the lowest point for this candle, okay?
Okay. All
And
right.
then it started to rise up again till here. And when it came here, then the 4-hour had completed.
Okay.
So it moved over to the next 4-hour candle, which is here. Okay.
Okay.
So let's just do this again. A candle, whether it's 4-hour or 1 hour, it doesn't matter.
Yeah.
The candle started here.
That's the. Okay.
Right? Then it went to this point, which was the highest point in this 4-hour candle.
Yes.
And then it went to a lowest point, which is at the bottom here at this wick. And then it started to rise up and it actually closed here, which the 4 hours have expired. Okay.
Okay.
And then when this candle 4 hours was complete, this is exactly how it looks when it's done. 4
All right.
hours worth of
Okay.
4 hours worth of work. So when it closed, what had happened? The candle changes over to the next candle.
Okay.
Right. So the next candle, it started here where my pointer is.
Yes.
It could have went right up to here, which is this highest point of this candle. Can you see that's where the wick is? You see the wick there?
Yeah. Yeah. I can see that.
Right. So it went to that point as a highest price. Then it could have came right down to this point. Can you see the wick there?
Yeah. It's very small.
Right. It came down to the lowest point of this candle. And then it decided to, well, it started to make its way back up. But before it could go right up again, right at this point, it's a very thin body. You can see this body is thinner, is smaller than this bigger body here, right?
Yeah, I can.
So as it was starting to make its way back up, the 4-hour time frame was up and it changed into the next candle.
Okay.
Right. So the next candle, what had happened, there is no wick at the bottom, which means it didn't come any lower than where it is. It just continued from here on.
Okay.
So it continued from here on. It came to here, to the tip, which is the highest price in this candle, and then it started to pull back or come down. And then from
Okay.
here,
So
yeah.
yeah. So now I was going to ask you a question. So that one there that your mouse is on.
Right.
So the very bottom there is where it started at. Am I correct?
Yes, the bottom here is where it started. So from
Yeah,
one candle to the next, from one candle to the next, it's like a stepping stone. You would always be able to step from here to the next one.
Okay, all right.
And then from here, this one here, it went slightly up, but because 4 hours was complete, it jumped to the next candle, which is another 4-hour candle. And then it started to go up. It went right up to here.
Yeah.
And then it started to come back down. As it came
then the
down,
4 hours ended.
Yes, exactly. Then the 4 hours ended. Then it had to jump into the next candle. And then it started here, which was the highest point.
Yes, and then it decreased.
And then it decreased. Now, if it decreased and stopped right here, then the candle will finish right here. But it decreased and it continued right to the bottom. And then when it came to the bottom, it stopped right here and then it started to push back up.
Okay.
And when it came here, then the 4 hours was complete. Then it jumped into the next candle.
Okay, all right. I think I'm starting to understand a little bit now how it works.
Right. So basically, every candle, you should find like like for example, the candle, the price left this candle and it entered this candle, left this candle and entered that
Yeah.
candle. It's like stepping stone. When you're running on the
Yeah.
on the water and you've got stones or something, or anywhere you're running in the park, and you've got stones from one to the next, you are stepping over
Yeah.
and jumping to the next. You with me? You with me there?
Right. Yes.
Okay, so that's how we
Yes, I am.
right. That's how we measure the currency fluctuation, whether it's going higher or lower. We use candles for that. Okay.
Okay.
Now, beside candles, there's other items that you can use. For example, look at this. This looks so simple. It's going up. It's going down. It's so easy to understand. You with
Yeah.
me?
Yeah.
But
Yes. No, I can. Yeah.
yeah, so if you look at the price is coming down here, then it's going up, then it dropped a bit. So prices dropped, then it went up, came down, went up. So basically what's happening, this graph here is giving you a much clearer picture of what's happening to the GBP NZD.
Yeah.
But we do not work on these graphs because these graphs do not tell us very much except it went up and came down.
Yeah. Okay.
And we just don't want to know that it went up and came down. We also want to know what it did when it went up or what it did when it came down.
Okay.
So we come out of that and we do not want to confuse ourselves. We just go straight into the Japanese candle because the Japanese candle tells us how high it went, where it entered, how low it went, and where it exited the candle.
Okay.
You with me?
Yes. No, I am.
Okay. So if you look at from here, you can see the price came down, then the price went up, then it came down, then it went up, and all of that. Okay.
Yeah.
All right. So the red here typifies the selling power. For selling, we call it bears because bears are always pulling you down. You with me?
Okay. So bears means it's pulling you down.
Yes. Bears mean it's pulling you down, or bears means they are selling or they are sellers. Okay.
Okay.
And when you are buying or it's pushing you up, it's a bull. You know, a bull got horns that picks you from the bottom and throws you up.
Yeah.
Right. So we all talk about bears and bulls.
So basically, that is like bullish and bearish.
Exactly. Yeah.
Okay.
So this candle here is basically, if you look at where it entered, from here it skipped over to here. It came down. So that was a selling power, or that was a bearish candle.
Okay.
And then from here, you see it skipped over to here. It pushed up right to here, which was bullish, but it came back down. And the bears didn't push it far enough to change the color. You understand?
Yeah.
So right here, the time frame was up for 4 hours. It moved to the next one, and then the bulls pushed again. That is why you got this one being green.
Yeah.
Okay, so bears basically are pulling you down. Bulls are pushing you up, which is bears is selling and bulls are buying.
Buying. Okay. Because I was watching the video, one of the videos earlier on, and then I saw those terms. So I just noted them down because I was going to ask you about that. Yeah.
Okay, that's good. Then when we talk about time frame, for example, if you go into Google Maps or Google Earth, when you zoom right out, you see the entire globe, okay?
Yeah.
And then when you want to get into France, for example, into Paris or wherever you want to get into. So what you've got to do, you've got to come out from your big time frame of the Earth or the globe. You've got to come closer into Europe.
Okay.
So getting into Europe, you are reducing your time frame. You know, like from how you get monthly, weekly, daily, 4-hour chart, 1-hour chart, 15-minute chart. So from the global effect of seeing the entire globe, you focus now on finding Europe. And once you find Europe, because from outer space, you can never find yourself in Paris, sitting in Disney, for example.
No, of course. So basically, could you define it as like your scale, basically?
Yes, you can call it that. So you've zoomed into Europe, then from Europe, you've zoomed further in and you got into France. And from France, you zoomed further in and you got into Paris. Then from
Right.
Paris, you zoomed further in and you got into Disney itself.
Yeah.
And in Disney, you zoomed into your 1 minute time frame or 5 minute time frame to find your actual location.
Okay. All right.
So that's what the time frames are. Basically, we can look at a monthly chart, which is this, but you do not know what happened in this month. All you know is that it was very bearish. It went right up, it went right down, and it's not giving you the full detail except it was very bearish.
Okay.
So you come out of monthly, you go into weekly, daily, 4 hour, 1 hour, 15 minute. You're getting closer and closer to what's happening minute by minute update.
Yeah. Yeah. Okay.
Okay, so if you looked at that 1 month candle, it didn't tell you very much except it told you that it just went down all the way.
Yeah. Yeah.
So it was a very bearish month. But when you go and you want an up-to-date what's happening, so you look at the lower time frame. So if we were to go into a 1 minute chart, you see, if you look at there's a current price right here. Okay.
Okay.
Can you see this thing? This is changing because the
Yeah.
market's open now is changing here. Okay. But if we come out of this, we go into a 1 minute time frame. This 1 minute time frame is telling me 2 minutes ago, this is what was happening. It was very bearish. A minute ago, it was very bearish. Now the candle is very bearish. You can look at this on the right-hand side here. Can you see this?
Yeah. Yeah.
All right, this is red. It's typifying bearish. The moment this goes up, it'll change to green. It's telling me that there's 10 seconds left in this candle because we're on a 1 minute candle, okay? Just watch this candle will change to another candle as soon as this one closes. We got 2 seconds left. Check that. You saw that?
Yeah, I did.
Right. So now you saw the candle change color is going up.
Yeah. So that's
So
bullish.
that's giving us up to the minute report as to what's happening at this particular pair, which is the Great Britain pound and New Zealand dollar.
Right. Okay.
Okay. So when we measure the price of this pair, it is 1.94990. So if you look at the right hand side, let's just focus a lot on the right hand side right here. It's 1.95000, 1.4999, 1.5003. So what's really changing much is not the 1.9. The 1.9 will change at a very drastic fluctuation in the value. But what's changing more often is the last one number or last 2 digits. Watch this candle change again, okay? It's almost finished. There, you saw that?
Yeah.
Right, so we got 56 seconds left for this candle to change, then you'll see the candle change to the next minute, okay? So this figure that's changing at the end here is we actually, okay, let's just say it's 1.94987 currency, the last digit, which is that 85 or 86, can you see that last digit? Now it's 88.
Yeah, I can see that.
So the last digit, which is that, okay, there it went up a bit, you saw, it changed now into 1.95014, 1.95000. The last digit is regarded as a pip.
Okay.
It's called a percentage in point.
Okay.
Okay, so if I say again.
No, I'm listening to you.
Right. So if I were to say, if I were to give you change, let's say for example, I'm at the store, you came and bought a loaf of bread, and I were to give you one rand 42 cents.
Yeah.
As change. So for easy understanding, that 2 cents is like 1 pip.
Okay.
Okay. So the 2 cents, instead of me giving you 1 rand 42 cents, I gave you now, okay, 1 rand 43 cents. So the difference between the 42 cents and 43 cents is 1 pip.
Okay.
Right. So for example, if we are talking about 1 pip, so this figure that's changing, it's like changing by 1 pip, changing by 2, changing by 4, changing by 5. You understand?
Yeah. Yeah.
Okay. So for now, don't let that trouble you too much, because when you're dealing with different currencies or different assets or securities, it's not 1.9 point something. It's like 11,900. So if we go to like a NAS chart, which we specialize in a lot, or you go to a
Okay.
SPX chart, the price is like $3,440.
So that's how much it would cost to buy in there, right?
But you're not buying that entire thing. You are buying according to what you have in your account as such. Okay, so if you were to start trading, I would suggest you start trading like on a demo account,
Yeah.
which means you'll trade on money that you're just practicing and you're trying
Right.
to understand how it goes. When you feel
Okay.
you're making money on the demo account, then you could fund your account. Let's say, for example, you put $100.
Okay.
Right, you put $100 into the account, and then you try to make maybe a good few dollars. Like, for example, you want to make maybe $20 for the day at least. $20
Okay.
is better than not having $20. So you're happy with $20. You made like $300 or $340 or whatever for the day.
Yeah.
You put your trade away. You don't stress about it because it's $300 that you never had before. Now you have it. You with me?
Yes.
Okay, so when you start becoming productive or start generating profits little by little, then that will increase. Whether you're making $20 or whether you're making $2,000 for the day,
Okay.
that's entirely up to you. If I say making $2,000, that's very, very possible.
Okay. All right.
Right. So to help us with what's going on in this chart, we use things called indicators. So for example, if I'm looking at this chart, I can look at it and tell you, okay, fine. Nikhail, can you see these 1, 2, 3, 4 candles here, 5 candles? These are all bullish. Am I right?
Yes.
Then you can see these are all bearish.
Okay.
Right? These two are bearish, right?
Right.
Okay, so this means that price was going up. You with me?
Yes.
And this means that price was coming down.
Yes.
Okay, so just by you looking at one candle here is higher than this candle, and this candle is higher than this candle, and this candle is higher than this candle, and this one's higher than this, you commonly understand and are sensible enough to know that price went up.
Yeah.
Right. So for you to know that price went up like that.
Yeah.
Because you physically and visually are looking at it.
Yeah.
Right. Then if you look here, if you look at what happened, you can see price went down. Although this is not a red candle, and although this is not a red candle, it tried to push its way up, but the next candle pulled it down, and the next pushed it down more. You with me?
Yes.
Right. So because you are visually understanding this, you know that price went up and price went down.
Okay.
Sometimes there are certain things that we're looking at this entire chart, but we're not understanding what happened behind the scenes.
Okay.
So we have something that helps us called indicators.
Okay.
Right. So what the indicator does, the indicator tells us that this is what has been happening. It's been going up, or it's been coming down, or the indicator tells us that there was a lot of people in at this time. The time zone here was, let's just make this time zone into something we can understand. Right. So the indicator tells us at this time, at 9:30 in the morning, there was a lot of buying going on here. You understand?
Okay.
And then 9:14, there was a lot of buying going on. So that's what the indicator is telling us. But because we understand that it's going uptrend or uprising, or it's going up, we know that these are all buying candles or all bullish candles.
Okay.
Right. So indicators tell us things that we do not know, or things that we should know. Okay. So for example, at the bottom here, these things at the bottom, they are not candles. They are not Japanese candles. They are called volume candles.
Okay.
Or let's just call it volume for argument. Okay. So this one is telling us the volume for this candle here was this high.
Okay.
And this one was this high, and there was more on this one than this buying. There was less buying power here. You understand?
Okay. Yeah.
And then this indicator is telling us there was a lot of selling power. Can you see? Therefore, the candle came down.
Yes. No, I can see that.
Right. So this is just one indicator. There's other indicators that help us along the way. For example, let's open up this one, okay? This is a line to tell us that this is, now don't let the indicators confuse you, because they are something that you would love to learn, and they are something that you will want to understand as you start trading.
Okay.
Right. So this thing is giving you, like if I were to tell you, okay, Nikhail, we have these candles here. Can you tell me what's the average of this candle? So you're going to say, okay, I don't know what's the average of it, but I can tell you this one was high, this one was low. So somewhere here in the middle is the average. You with me?
Mm-hmm. Yeah.
Okay, so that's what this is called. This is called a MA, moving average. So it's going to tell me, it's going to tell me that this was the moving average of this pair at this particular time.
Okay.
Right. So
okay. So if I understand correctly, that line that's going up and down, that blue one there,
yes,
that moving average is the average between the bearish and the bullish.
yes.
Okay. All right.
Now don't try not to understand why it's here and not in the middle.
Okay.
Let's not worry about that for now. But you know now, for basic understanding, it's an average between the buying and the selling.
Okay. All right.
Right. You with me?
Yes.
As we go along, it would get more interesting, because I will tell you this average point here is taking the last 5 candles and giving me an average there.
Okay.
Or I'm going to tell you this average point here is taking the last 6 candles and giving me an average there.
Okay.
As you start developing your own strategy, as you start understanding it the way you are understanding it, you are going to start on the inside of you, you're going to start formatting your own understanding and planning and how you perceive it to be. Okay?
Okay.
And then you're going to come up and say, hey, how's it, Roland? You know what? I think by today, this price is going to be here. And I'm going to ask you, okay, so why you say that? Why you say it's going to be here? Then you're going to tell me, okay, because look what it did here, and look what it did there, and look what it did here. So I think it's gonna go there by end of today. It's gonna come here.
Okay.
So that's where we want you to get. I want you to get to a point where you're going to understand where it's going to be by end of today, or by tomorrow, or by next week, or by end of this week.
So we'll be able to determine what it'll be the next day just by looking at what's happened in the past couple of hours, right?
Yes, exactly.
Okay.
So by looking at the past, you're going to predict where it's going to be in the future.
Okay.
Okay, so what I can do, I can go into something here called bars pattern. I can say, okay, fine. You know what? Let me just try and work this out. Let me guess and say, okay, if this is how it behaved, let's make it red. If this is how it behaved, then I'm looking at it doing this, coming down. Can you see this red design here?
Yeah.
So there's going to be many things. Now, sometimes you'll be surprised how I did that, how I copied and told you where it's going to be. Or sometimes I'll tell you, okay, I think it's gonna go there.
Okay.
Then you're gonna say, okay, fine. How do you know? I said, well, this is how I know. Because of that, and because of that, and because of this, that's why I say it should be going there. You with me?
So, yeah. But for argument's sake, let's say it doesn't do that, then what?
Okay, it doesn't do that. It's totally fine, because remember, trading is a total risk. So in other words, I'm not saying you're going to put $100 and you're going to lose your $100. I'm saying you're going to put $100 at a risk of losing $100.
Yeah. Okay.
Okay. So do not be afraid if I tell you that there's a risk of losing $100, because you will speak to anyone in trading. They'll tell you, do not trade with money that you cannot afford to lose.
Okay.
So if I were to put $100, let's just say I will make out of that $100, I'll make $500 in the day, okay?
Okay.
And then tomorrow, I tried to apply the same principles or same strategy, and then I went and bought something up and I lost $40 out of that 500.
Okay.
It doesn't mean I'm a bad trader. It maybe just seems I either made a bad call or I missed some indication of some pointers along the way, or it means my calculations were totally perfect. My formulas and my analysis was correct, but something happened in Britain that changed the flow of currency and the value of it.
Okay.
Or something happened in the States that Trump said and it affected my currency of the US dollar. And instead of the US dollar getting evaluated, it just dropped, devalued itself.
Okay.
And that's how the currency went down, and I lost $40 because someone said something wrong.
Okay. All right.
Okay, so that's basically what happens when you look at the chart. You can foresee where it's going to go to, and based on that, you're going to take a trade and say, okay, fine, I'm going to take a trade knowing that it's going to come here to this point. I'm going to take a buy or take a bull trade, and I'm going to say it's going to reach here. So I'm going to take my trade now, and I'm going to close my trade here. I'm going to put 1.0 as my lot size, which could be like about $30 or $10, okay?
Okay.
I'll close my trade here, and my trade will make me $80.
Okay.
On that basis, maybe if it doesn't go there and if it's going negative, I'm prepared to risk a maximum of $30. So when that thing, if it comes negative against you and it comes to about $28 or $30, then I want to say, okay, fine, you know what? I want to close my trade. Never mind, I lost my $30.
Yeah.
But if it doesn't go negative against you, it will go into positive, and it goes close to where you set your take profit. We call it TP, which is take profit. Right. So if it's getting close to where you set your mark to close your trade, which is your take profit mark, and it's $80 profit that you're looking to get, and it came to about $70, and then maybe you look at the chart and something's happening, maybe it's some news that's amending the strength of the currency, then you want to close it at $70, you're welcome to close it.
Okay.
Instead of hanging on to it to try and make your $80. So you close it and you made $70 profit instead of $80. It is still way better because it never go in negative or never go against you.
Yeah. Yeah.
Right, so there's very much more detail that we have to get into, but basically I needed you to understand what is foreign exchange, you know, why there's a difference between the buying and selling. I needed to explain to you what is a time frame, getting deep down into zooming right down to where the ground is to find things. What is pips, which is a percentage in point, you know, between the 1 cent, 2 cent, 3 cents, and what have you.
Yeah.
Then I think we did the indicator, which is, I just use the moving average for now. That was there. There's a whole lot of moving averages that you can use. Any other questions, Nikhail?
So far, what we've gone through now, I understand it. But if obviously there is other questions when I have my session with Prince, obviously I'll ask you and him, and then go from there. But so far, it seems I'm understanding, with the candles and the bullish and the bearish, it's starting to make a lot more sense, because when I was looking through some of the stuff on the group yesterday and even the videos I was watching this morning before our session now, like, it was very overwhelming and confusing, because it's terms that I've never come across before. So I wasn't understanding what was going on, but it's starting to slowly make a little bit more sense as we go on.
Yeah, the group is very much in detail, and basically the group is swimming in the deep end. That's basically it. The group has been thrown in the deep end, and there are many of us in the group that has learned stuff that we never knew before.
Okay.
Some of the guys in the group has never traded before, but on
Okay.
on an account like a demo account, for example, they are making thousands of dollars.
Okay.
The group is very much in detail, and very often they would ask you why you're seeing this or why you're saying this and how can you justify,
Yeah.
share what you're talking about, you know,
Yeah. Yeah.
give some analysis. And then it's sometimes you get a bit concerned, you know. I said that this is going to be a bullish trend or buying trend. Why? You know,
Yeah.
I need to know why. So for example, let's just quickly, I've got a few minutes left, let's just do this here.
No problem.
If you look at this candle, can you see this candle here, right?
Yes, I can.
Right. That's 1, 2, and 3. There's 3 candles.
Yeah.
There's 5 in a row, but there's 3. Those 3 candles actually mean white soldiers.
Okay.
That's a pattern,
What do you mean by white soldier?
right?
Oh,
It's
okay.
it's a pattern called white soldiers.
Okay.
Okay.
So if it's constantly increasing, you mean the pattern is white soldiers?
Okay. Candlestick patterns we will learn as we're going along, but for now, 3
Okay.
of those bull
Yeah.
candles are called white soldiers.
Okay. All right.
3. Okay. Then if you
Okay.
have 3 of bear candles, black crow.
Yeah. Black crow. Okay.
Right. So don't be too concerned about the names of them, how they came about, and all of that. For now, just understand that this means something, or this means something. You understand?
Yeah. Yeah.
Right. Then the other thing is I want to show you, like for example, you'll find this candle here. Can you see it's got a small body but a long wick?
Yes. Yes.
Right. It's called a wick because it's called a candle. We call it a wick. Some people call it a shadow, but
Okay.
from here to here, this is the wick because it's got a body right at the top and it's a long wick. We call it a hammer.
Okay.
I mean, it looks like a hammer. You with me?
Yeah. Yeah.
Right. Then this candle here, which is a long wick on the top and it's got a small body, it's called a doji, D-O-J-I.
Okay.
Okay, but for now, let's not stress about what they called and why they call that. Just worry about what does this mean to the next candle. You understand?
Okay.
So
Yeah.
if you know what this means, like for example, this means that the price went right up here and the bears pushed it right down. And then from here, it jumped to the next candle, which means if the bears are pushing it right down, that means the bears had power to push it right down here. You with me?
Yes.
But because the 1 minute time frame was up, it had to go to the next candle. So what does it mean for the next candle? It means the bears are continue to push it down.
Okay.
So if I looked at this candle, I told you, okay, this candle is pushing down. But because your 60 seconds expired, it had to go to the next one. And because it went to the next one, I could easily tell you this is definitely going to come down. And you can see
Okay.
that's exactly what it did.
Yeah.
Now it came right down here. But when it came here, you can see that the bears pushed it up. See the wick is still here.
Yes. Yes.
But
yes.
the bears pushed it back up. And when the bears
Okay.
push it back up, that means there is a lot of buying power pushing the selling power out of the way. Okay. And then because the bears pushed it right up and then the 1 minute expired, then it went to the next candle. So right here, it seems to be a lot of tug of war between the bears and the bulls right here. Can you see this
Okay.
candle?
Yeah. Yeah.
So with this tug of war that's going on, it's quite interesting for you to understand this. I mean, with a 1 minute, anything can happen in 1 minute. You know, that is why you're seeing so much of activity on a 1 minute. If you go into a 4-hour chart, you're not gonna see that much of
What's
activity
happening?
in this candle.
Okay.
Right? You'll see the movement, but you're not gonna see that much of activity as you would see on a 1 minute chart. Okay.
Yeah. Yeah.
I see when I told you that the bears and the bulls, they're pushing back up. You can see what the bulls are done. The buying power is trying to push it back to where it should, where it came from this doji.
Yeah.
Okay, so candle patterns, don't worry about the names. Candle patterns is something that's going to help you. So for example, we said this is going to happen then you know that will happen. If this is the pattern, then that will happen. If this is a pattern, that will happen. Okay.
Okay.
Right. So don't stress about candle patterns or the names, but we're gonna start to help you with what the candle, what the next candle is gonna do. Okay, that's what we look
Okay.
to teach you, what the next candle is gonna do. Then there's other things called W pattern and M pattern.
Okay.
Right. So for example, if you look at let's see if we can find a W and M. So charts generally do this here. So from here, there, like that.
Okay.
Charts generally do that. Okay.
All right.
They do W, they do M, but we don't live hard and fast rules against any pattern as such, is because it can change anytime, or news that can happen in any country that you're dealing with the currency. So when the news hits the platform, then the value of that currency changes, and then it fluctuates your trade.
Yeah.
Right. So if it's not a W pattern, it could be an M pattern. It could be, there's patterns called head and shoulders. There's patterns, a whole lot of patterns, but let's not stress about it for now, as long as you know what is foreign currencies. So for example, let's talk about, before we end this, you see we got GPP at the first of this pair, and then we got NZD.
Yeah.
Right. So GPP is your base currency in this pair. Okay.
Okay.
Right. Because Great Britain pound is your base currency, and your NZD is your secondary currency. So if this goes up, it means the Great Britain pound is strong.
Okay. And if it goes down,
if this goes down, the Great Britain pound is weak.
Is weak. Okay. All right.
It's losing value or weaker. Okay. But remember,
okay,
we're comparing this Great Britain pounds to the New Zealand dollar.
Okay.
Right. So we're comparing Great Britain pounds to New Zealand dollar. So in this case, for these candles, the Great Britain pound against the US dollar, against the New Zealand dollar, has lost value.
Okay.
And if this is the trend you're looking at from here, the Great Britain pounds has gained value against the New Zealand dollar.
Okay.
So the first pair, or the first currency, is the base currency. Just to help you remember this, if it goes up, that means the Great Britain pound is going up. If it goes down, if this is price now, okay, the candles are price. If price goes down, that means the Great Britain pound is weakening. Okay, so whenever we're talking about a pair, if it's Euro USD, that Euro is either going up or the Euro is either going down.
Okay.
You're with me, right?
Yes, yes.
Okay, so let's just look at this now. For example, Great Britain pound to to New Zealand dollar, it's going down. So what currency is weakening?
The New Zealand dollar is weakening.
Okay, look at it again. The Great Britain pound and New Zealand dollar, right?
Sorry, the Great Britain pound is weakening.
Always remember the first currency is your base pair. This is the base out of the two pairs. Right. Okay. So if this is going down, that means the Great Britain pound is weakening.
Is weakening, yeah.
Right.
Okay.
Okay, you understand that, right?
Yes, yes.
Okay, so at the same time, looking at the same candles, if this is going down, what's happening to the New Zealand dollar?
It's strengthening.
Yes, exactly. Although this is going down, but the New Zealand dollar is strengthening.
Okay.
You with me?
Yes.
Right, let's do that again. The Great Britain pound to the New Zealand dollar. The Great Britain pound currently is weakening. That means the New Zealand dollar is strengthening.
Strengthening, yeah.
And here, the Great Britain pound was strengthening, and that means the New Zealand dollar was weakening.
Okay.
You with me there?
Yes.
Okay, so any questions?
Just one. I don't know if it's related. What is that 161.80% there, that line going across?
Okay, let's just go into 4-hour time frame. Let's go into more detail. Now you want to know something? There's a whole lot of lines now, right?
Yeah, no, I can see all of those.
Right.
Yeah.
All of them. Now that 161 is part of an indicator of all these.
Okay.
Right. So if I were to zoom to where price is, because we're dealing around where price is, you just saw your 161. You understand?
Yes.
Right. So this 161 is one line of a tool that's called Fibonacci.
Okay.
Right. It's one line of a tool called Fibonacci.
Okay.
Don't worry much about it. Don't worry what is 0, what is 161. That I will teach you how to do it when we're ready for that.
Okay. No, I was just curious because I saw that
that's fine because it was in our price range.
Yeah.
Because it was in our price range, because this is where price is at the moment, right? So
Yeah.
let's just tell you what is 161. If I were to look at this, I'm not sure what date this was done, but this is basically a tool that tells me, let me see if I can do this. See, there's other lines here as well. All these lines are to help us decide what to do, okay?
Okay.
Right. Let's talk quickly what is 161. This is not part of introduction, but because you asked the question, I'm going to give you the answer, okay?
Okay.
There was a time, let's say I did this year, maybe 2 weeks ago or so, okay? I said that this was my high, okay? I'm seeing this high here because see there's a line here, there's a dotted line going up.
Yes.
Right. This was my high and the dotted line is coming till somewhere here, okay?
Okay.
So this was my high, this was my low. What I was saying, now this is a tool, this is not part of introduction, but this is a tool that's going to help you make decisions, okay?
Okay.
Right. So this was my high, this was my low, and I pulled a tool called Fibonacci, which told me, because this is my high and because this is my low, now you see this is how easy it is to make decisions about trades, okay, Nikal?
Okay.
Because this is my high and this is my low, and my price is here, I must wait. In other words, I must be patient for the price to go from here back to here, okay?
Okay. Okay.
When the price goes back to here, then I must take a sell trade.
Okay.
So I must take a sell trade. And then when you take a sell trade, which means the price, sell means the price is going to go down, okay? So you can see the price came down here.
Yeah.
And right here, the price started to, let's say zigzag for now.
Yeah.
We call it ranging, or we call it consolidating, or we call it sideways. Price was going sideways. Okay?
Okay.
And then the price still came a bit down, but still went sideways around here. Can you see all this here has gone sideways?
Yeah. Yeah.
Right. If you look at history of this currency pair, look at this here. Can you see this?
Yes, I can.
Right. That means price was going sideways. Okay?
Okay.
So in that same region, this whole price line here till here, can you see this whole price line?
Yeah.
That means price was going sideways. Okay? What does that mean? Price was going sideways. And why did it go sideways here? It means at this price range, there's a lot of support or resistance. Okay? Now, do not let this confuse you, but I'm saying this tool that you asked me about is only to help me make profit.
Oh, okay. All right.
Right. So because I know that was my high, that was my low, I did this tool, which got from 0 right to 240, going right to 300. Okay. Can you see all this here?
Yeah.
Right.
Yes, I
so
can.
What this told me, price was here, wait for the price to come here. When it came here, Then you take your sell trade, and then you saw it started going into profit, right?
Yeah.
I took my sell trade here. So when you take a sell trade, it must go down. You with me?
Okay. Yes.
If you take a buy, it must go up. If you take a sell, it must go down. So I took my sell trade here, and now
Okay.
it's going down, which means I'm in profit already, okay?
Okay.
Then when it came here, it started ranging or sideways or consolidating. And the
Okay.
reason why it did that here is because in history, it did it here also. So when you go to the shop to buy a loaf of bread, if the loaf of bread is generally 10 bucks, and now the guy is selling it to you at 12 rand, you're not going to buy it
Okay.
because it's not the normal price. People are going to
Yeah.
go past his store. You with me?
Yes.
But when he made it 10 rand, a lot of people started coming to his store.
Yeah.
Because
Because
this
he
was
made
a
it a bit
popular
cheaper.
price.
Yeah.
Say again?
Because he made the bread price cheaper.
Yeah, or he made it reasonable.
Okay.
So this was a reasonable price that was being traded. See where my cursor is here?
Yes.
And when he brought it to this price, then price became reasonable. So it was being traded a lot in this price.
Okay.
You know, if I'm just scrolling here, I'm seeing on the 2nd of August, I did the Sunday analysis. Can you see my name here?
Yes.
2nd of August, I did an analysis based on this here. So if I click
Okay.
on that, I'll probably see my analysis. But anyway, beside the point. So when price was here, price was reasonable. So people were buying and selling right here. Okay.
Yes.
So then from here, price started to drop more. Can you see?
Yes, I can.
Right. When price started to drop more, price came down to something called 161.8%.
Yeah.
So in my trade, I would say when price comes to here, I will close my trade. I'm happy with my profit. Or
Okay.
when price comes to 127%, I will close. Can you see it in TP here? TP RD.
Yeah.
That is
Yeah,
where
I
I
can.
put my TP,
Okay.
which means my take profit. So from here, when I did my sell trade, my trade came here and my trade took its profit.
Okay.
So yeah, you must have made a couple $100, okay?
Okay.
But this tool was telling me that it could go even to 141, it could go even to 161%, it could go even to 200%.
Okay.
So these percentages are based on where I pull my price.
So is that so the percentage there is what the profit you'll receive, but is that what it indicates? No.
That percentage is telling you from here to
Yeah.
from my highest point to my lowest point, it's 161% away. That's what it's telling me.
Oh, so does it mean that's how much the value has
Dropped.
decreased?
Decreased,
Okay.
yes.
Okay. All right.
Right? So this is 200%, and this is 227%, and this is 241%,
Yeah.
and 300%, and on and on and on and on.
Okay.
So this tool is telling me, Rollins, when you take a trade, the price is here, let it go back there, call a pullback, let it pull back to there, then you take your sell trade, and you can take your profit whenever you're happy. So I took my profit when it came here at 127%. If I left my profit, I could have taken it here, or I could have taken it at 161% away from the original point, which is a price of 1.94793. Can you see there's a price here?
Yes, I can.
That's the price for the Great Britain pound to New Zealand dollar, 1.94793.
Okay.
Earlier, we were talking about the price here, which is 1.95 thousand something. So this tool that I have on this thing here is just to help me decide when I should take my trade and where I should close my trade, my entry of my trade, my exit of my trade.
Okay.
So this one here made me a couple $100, right? Which is simple because I used a tool called Fibonacci.
Okay.
Right. So if we are going into, let's see if I can clear this stuff away. If we are going into simple things like what is a candle, what is time frame, what is pips, what are indicators. What I showed you is just an indicator. Okay, don't stress about the indicator.
Okay.
That indicator is just to
No problem.
Just to help get an understanding of what price is doing and where it's doing it at.
Okay. All right.
Okay. Any other question?
Not for now. No, I think for now that's that's
Okay, so
basically given me a slight understanding so far of this.
yeah, so if I were to ask you, do you know what is foreign exchange?
It would be the exchange of foreign currencies.
Okay, perfect. Yeah. Do you know what is the time frame?
That would be like, for me, I understand it as the scale, basically. So
Yeah, that's fine. If you're leaving from Johannesburg to Durban, it took you 4 hours. That was the time frame it took you to go from Johannesburg to Durban. You understand?
Yeah.
Right. So from Johannesburg to
So
Durban is
basically
a
it's
4
just
hour.
showing
That was a scale indication we're using. From one candle to the next candle, if you're on a 4 hour time frame, that candle will take 4 hours to open and close.
Yeah.
Pips is the last few cents in that price.
So
It's a percentage in point. Yeah, which is the last few cents. For example, I'm giving you a change of 1.42 cents. That too is like a pip.
Yeah.
Then we did something called the indicator, which is a moving average, just to show you what it means. The other indicator that I showed you now, which is called a Fibonacci, which is why you asked me this question here. It seems a bit too much or too confusing, but I promise you that's how you'll make a lot of money using that.
Okay.
So for now, you just worry about the simple line here.
The candles and the wicks, basically.
Yeah, you see this moving average here is telling you an average between the buying and selling. So that's called a moving average.
So the MA is moving. Sorry, I'm just making notes.
Yeah, that's fine. Remember that MA, or the moving average, is just one out of thousands of indicators.
Okay.
Right? So one out of thousands of indicators. But I just wanted to tell you what an indicator was to help you make decisions.
All right.
And then in terms of candle patterns, maybe just go and research on candle patterns and learn something. Don't really stress about the names of it, because there's no test that you are writing as to what it's called. You just know it and understand what it does. Eventually you will learn it on your own without even bothering yourself.
Okay. So okay, from your point of view, how long have you been trading for?
About a year.
Oh, okay. So you also didn't have any knowledge at all when you first started?
Yeah, none of us.
Okay, no, sorry, I'm just asking because when obviously when I started speaking to Prince, because my friend and I, we're both starting with Prince, so we obviously, when we first started speaking to him and he was explaining things, obviously it was like a lot of information which we didn't understand, so I was a bit wary in terms of trading, so I was a bit obviously afraid that it would be very difficult. But do you think it's as difficult as I've been thinking?
It's not difficult. You look at it when you're thrown in the deep end, anything is difficult. You don't even know how to swim. Then how are you going to come out of a deep end?
Yeah, no, of course.
But if you learn the art of getting out of a tough situation, it's simple. You'll come out of it.
Yeah. Okay, no, because that was just my biggest concern.
You've got to get to the shallow end of the water. You've got to feel your feet. You've got to feel the water. You've got to feel the flow of the water, the sand.
Yeah.
Before you get thrown into the deep end of the water, So if you do not feel the ground now, then you're never going to survive in the deep end. So just a quick introduction hour or so just to tell you a few
Okay.
things about it, just to open the way for you to understand what Prince will go in sometime into great detail, and you may even not understand all of it. That's fine. Don't stress. Just touch base with me again, and we'll fix it up for you.
Okay, perfect. No, thank you. Because Prince did say, he did tell me yesterday that he likes throwing, his students into the deep end. And then if they don't understand, then obviously he's there to obviously help them along the way as well. But obviously, like, I mean, that's his strategy, and it does work. But I'm just like, with me, it just like I just like knowing a bit of an introduction before, just so that at least I have a small idea of what's going on.
Yeah, that's fine. No stress. We here to help you. Remember,
Yeah.
whatever you need help on, just ask. Don't be afraid. If you want, you
Yeah.
can also just send me a message, and I'll just help you out and show you and explain to you what you need to know and understand.
Okay, perfect. Thank you so much.
All right. Anything else?
For now, no, but maybe after the session with Prince, I might have a few questions for
Yeah,
both
that's
of you.
fine. Just note it down.
Yeah.
Ask him if you want to, and if he explains and you still
Yeah.
cannot grasp onto it, there's no stress about it. Just note it down.
Okay.
Ask me, and then
Yeah.
I'll see in which context he was trying to explain to you, and then I'll come with
Okay.
a simple explanation and make sure that you understand.
Okay.
Come out of the session knowing that you know what, it's highly possible to understand this thing.
Okay, cool. Perfect. Thank you so much, Roland.
Okay, no problem, man. Just take it easy, eh?
Yeah, you too. You too.
All right, short man.
All right. Sure.
Okay, bye.
Thanks.
Bye.
Bye.